in. Thanks for joining the stream. Hopefully y'all are doing well today. Back in it again after the weekend. Had a little bit of a rundown the last little bit. Yeah, so we kind of came in, Monday, kind of came in from Sunday into Monday, running down. Continued that rundown through Monday into today, and now we're kind of sitting around here around that 69,000 level. We're looking like there's a possibility of continued breakdown, but we are thinking that we could possibly need a little bit of a pullback first, so we'll have to jump into that as we get into more of the time zone, but we'll see how it goes as the live continues. Yeah, things are just kind of getting to the point of being, a little overexhausted, but we'll see. We'll kind of throw it on our charts, see what we got going on. Looks like we got a couple people in here today, so thanks for joining, y'all. Just wanted to say welcome in. So welcome in, Terry. Welcome in, Kathleen. Welcome, Spirit Maker. Thanks for joining. Yeah, thanks for supporting the live. If you all wouldn't mind hitting that like button, hit that subscribe button if you're not already subscribed. Helps the channel grow, helps us reach more people. But yeah, let's jump right into it. So today, like I said, we're kind of coming down into the short here. Yesterday, the system did call a short. Honestly, didn't think it would break down quite as far. It did call this breakdown technically, with how it was reading. Essentially, it said, if we got below, I believe it was 71 something, then we were going to continue that breakdown. And, we got below that pretty quickly, and we did continue that breakdown all the way down to that 69,000 level. So, like I was saying, pretty good breakdown all the way past target 3. If you traded it all the way down, I guess you could have made like a 10-to-1, but, a little crazy there. So, not too bad, though, for a trade yesterday. You got about a 3-to-1 if you took it all the way to target 3. The system did technically call that target 1, though, so you would have only made about a 1-to-1 before, just because the market wasn't confirmed it was breaking down until after we kind of dropped below that target 1, and even below 2, I think it was somewhere around there. 71, yeah, I always remember the exact number, 71 something there, and then we broke down. So, the system didn't call it, but it was kind of an iffy trade. A lot of things are getting kind of more exhausted. Things are kind of looking like we're ready to flip to the upside, at least for a little bit of a relief before we continue down. Like we've been saying, that 60,000, 55,000 level around there, that's where we've been kind of calling. I believe we've even kind of been looking at even as low as around 40,000. So pretty far down there. Just looking at, that kind of breaking down here, down to the bottom, down, just continue down, down to that level, just based off of the different math we've done, and things like the Elliott wave, and just different things we've been looking at, things that we've been calling out. That's why we're looking at that level. That's what we're looking at going down to. There's a couple of traders who are kind of watching yesterday that kind of flipped to be more of the same, more similar with that. With that call out just after yesterday's price action, how it kind of behaved. So looking pretty good. It's looking like that. Well, I guess maybe not looking pretty good, but looking for that level and that call out, it's looking pretty good in terms of how price action's kind of playing out here. So, we'll jump into it. We'll check out the daily brief. We'll check out the levels. We'll talk a little bit about, kind of what we're building out to be able to, possibly have y'all be able to sign up for, and just kind of run through it like that, and then we'll see what if anything we can trade for the day. So get some water. All right. So like I said, that was yesterday's trade. So we'll go ahead and go get our stuff for today, kind of see how the chart looks, and then we'll jump into that daily brief. So heading on over to Kabroda.com, you can see we actually have changed it quite a bit. Changed up our color scheme a little bit, made it a little more inviting, I guess, with that nice coffee undertone, and you know, just made it a little more inviting. Let's try what we were trying to do. Obviously, it's just us right now that can see this. But like I said, we'll talk about that later. So we'll just grab our triggers here. We'll head back to our chart here, and we'll throw it on Tuesday's levels. There we go. So Tuesday's levels is what you're looking at. We'll take off this trade here. Whoops, don't want the code. There we go. There we go. All right, so today's chart is kind of looking like this. We got that 30-minute range down here at the bottom of the range, I guess, closer to that breakout zone. And then we got the breakout triggers way up here. Pretty good gaps on... Where is that? All right. Can't tell if there's a... I don't know. I'm guessing that the... All right. Yeah, I'm guessing that the 30-minute... Or, sorry, not 30-minute. The... what is that called? The daily support is like right underneath this breakdown trigger. I can't see it anywhere else. It almost looks like it's right here, but I can't tell if that's just kind of like a weird thing on the screen. So, you know, that could just be, it could be right under there. Kind of weird though how close it is, if it is that. You got a pretty good gap on the other upside. You know, we haven't really been trading those too much as of lately, but originally, you know, we talked about those a lot more. But just kind of pointing them out, I guess. So yeah, pretty wide gap in general. I mean, you got a pretty good amount of range, almost a 3% gap in between the two levels. So pretty good gap there. 30-minute range, 30-minute. Wow, okay. The 15-minute candle on 8:30 to 8:45 is kind of breaking out of this range. Our New York session open candle there is kind of breaking out, like I was saying. So, I mean, technically we're looking like we're breaking to the downside here with a little bit of close. Yeah, all of the lines are right on top of each other for the breakdown. Yep. As we haven't really like fully tested it, I guess, but we have been kind of testing it, and what we've found with the gap between the two triggers is when they're wide like that, typically you're more likely to see the market in exhaustion, which is, you know, what we are in. So the wide gap does make sense. It doesn't necessarily mean it's not going to break down. But it is a good sign that we're in exhaustion, and it does mean, yeah, likely we are gonna see a reversal back into the pattern. Typically, you don't see a lot of run either way, actually, when it's like that. Take out that 60K. That definitely confirms our highly sets up strong potential for the lower levels of 45K and 50K. Yep. We'll kind of go over that here pretty soon. But yeah, if we take out some of the lower levels here, simply going to see that run down there. It basically just kind of sets us up for the rundown to come in and happen there. So yeah, we'll jump into that. I guess right now, so we kind of seen the levels now. We've seen what the chart kind of looks like. So we'll jump into the daily brief here. So you can see we've updated this slightly since last Thursday. So a little bit different. Essentially, we just kind of cleaned up this. This is actually similar to what we're actually looking at, being able to kind of send out to y'all. So it'll look something like this. So I guess if you guys like this or think it's pretty cool or would like to see it in maybe a little bit different format coming out to you guys, just throw that in the comments that you like it. But we'll kind of read through it, kind of talk about it a little bit. So the Bear Wave 4 bounce has rolled over hard. Price has broken down from the 73,158 range to 73,979 compression box, and has completed an overnight decline of approximately around $1,900. So it broke down about $1,900, and that breakdown took us to around 69,812. The session is now open at that 69,000 level and the bottom edge of the session block, and that's at the bottom edge of our session box. So it's closer to our breakout and trigger down there. The structural map remains unchanged. Bear Wave 4 terminates at or below that 80,632.72. Bear Wave Con 5 confirms on a weekly close below the 60,000 range. And then that 42,000, 45,000 level that Spearmaker was just mentioning is the wave level target. So that's the next target that we'd be looking at, is at 42,000 to 45,000. The distribution that printed for weeks in the 74,501 maximum gravity wall zone delivered its verdict. Price is now pressing that 69,000 level structural floor, and the next directional resolution is confirmed breakdown below 69,000 towards the 67,000, or a divergence-driven snapback reclaim of that 71,000. The LE wave parameters are pending weekly verifications. Wave context is approximate. So basically what that's saying is we do need that weekly close below that 60,000 level to kind of confirm that we are in the wave 5, that next bear wave that we were talking about, that we have been talking about. So if we don't really get that, technically we haven't started that wave 5. We're still in wave 4, so we're still looking for a possible move to the upside to kind of hit that 80,000 level that we were looking to break down at. Spearmaker says more than likely with the mid time frames, a 1 hour, 4 hour, and where the breakout trigger is probably where we'll see a bounce and pull back to, and then see rejection for the breakout. Yeah, I think that was kind of in the description we kind of just read about. So today's energy, the 4 hour and 1 hour locked bearish with a trending strong dual signals, and the ADX readings of 64.7 and 930 respectively. These are not trend signals, they're exhaustion readings. Every time frame is pinned and oversold. 4 hour RSI at 17.35 and the 1 hour RSI at 22.3. 50-minute RSI is at 27.39. Kinematic Fuel is overextended with an active exit warning across all 6 overnight session transitions. This is a spent engine, not a loaded one. So essentially, we are basically kind of getting to the end, like Spearmaker was noting with the wide gaps. We're looking at that overextended range. Basically, this thing is reading overextended pretty good. So the active dual divergence warnings have flagged continuously across all 6 session transitions from the New York Open to London Open, and the weekly time frame carries a confirmed bullish divergence against the bearish trend, with the BWP compressed at 23.1%. The bearish field driving this $1,900 overnight decline is structurally deteriorating at the highest time frame, making stop survival on a continuation short structurally unreliable. So basically, the system is going to stand down today more than likely, with condition 2 multi-timeframe exhaustion. The 4 hour momentum is negative. Kinematic fuel is overextended, and the 15-minute cinematic grade is overextended. All three subconditions are simultaneously true. Additionally, the condition 3 is applies in the short direction because the stop on the short entry is 69,345, only $333 above the entry at 69,000. While it sustained dual divergence structure across all session transitions, means a single snapback candle reaches a stop before T1 at 70,000 is even achievable. The measured move cannot survive the fuel environment, is being asked to run it. So essentially we don't have enough room there. Voice to text comments not as clear. Yeah, sometimes the voice to text is not very good on there. It gets words messed up, or it like mixes them up. We got a structural landscape, so essentially, you know what we were kind of looking at earlier. We got a breakout trigger around 71,000 and breakdown trigger around 69,000. Price is sitting on the floor out of the session box, blah blah blah. So we know where the price is at, right below our trade there. What would change this? So if this session becomes tradable when the 1 hour jewel exits, warning clear on the 15-minute cinematic grade returns to primed. Currently, the exit warning has been active across all 6 consecutive sessions transitions, and the 15-minute is overextended, meaning the short setup has no short time frame launch pad. A long becomes structurally valid if price breaks and holds above that 71,000 on a confirmed 15-minute close, with the 1 hour momentum flipping positive and the cinematic reading primed or loaded. The weekly bullish divergence and BBWP compression at 23.1% support a snapback trade from the long side if that confirmation arrives. So essentially, if we break that top side, then we'll be looking for an up trade, just because, you know, we could be seeing that possible move to the upside, just because we still are looking for that 80,000 level, because like I said, we're still in that wave 4 bullish kind of pullback on the longer term Elliott wave. So obviously that's not really the target for today, you know, 80,000, but we could still see a little bit of a long happen today if we do meet those conditions. Stand down if obviously these are already one of these is already true. Price breaks down below that 69,000 without a confirmed 15-minute triumph reading. Do not chase the breakdown. Price spikes above that 71,000 on a single wick without a confirmed candle close. Do not treat it as a breakout trigger. So essentially, the only directional scenario worth monitoring today is a bullish reversal, not a short continuation. The weekly bullish divergence against the compressed VWAP at 23.1 is a structural spring loaded against the overnight decline. If price reclaims at 71,000 on a confirmed 15-minute close with the 1 hour momentum turning positive and the cinematic fuel showing prime, the long entry becomes valid at 71,000 with a stop at 68,915 and T1 at 73,000 as the sole target. The maximum gravity wall at 74,500 and the exhaustion jet overhead make T2 and T3 unreachable under current field conditions, so do not enter the long before those 3 conditions are simultaneously satisfied. Yeah, it could be a decent time to buy some BTC. Yeah, I mean, we still, even if we do get that bounce here right now, we're still looking for the breakdown, you know, coming in eventually. You know, you can't really say the time, but whenever we start to flip more into that wave 5 of the the bear Elliott wave, and then we will be looking for that 42,000. So, you know, yeah, now not a bad time, but it also could be better, you know, later. You know, it's one of those things kind of up to, you know, the buyer. Not really, we're not here for any kind of financial advice. We're just here to kind of point some stuff out on the market and, you know, hopefully help you all kind of be able to read the market a little bit better. Really here for educational purposes and not really financial advice, but could be some time to buy some BTC. Definitely looking like we could see that bottom here pretty soon, at least for a little bit of an up run before we flip and go to the other side. Remember too, we are mostly on our channel, we're going to be talking about the 15-minute. We're talking about the 15-minute runs. We're talking about like pretty small intraday little bumps up. We're not really talking about the longer. I mean, we are talking about the longer term trend, but not really solely. Our main focus was really on more. It's kind of scalping on the 15. But yeah, we are. That's kind of the trade today. So that's what we're looking at. So, it is looking like we could get a breakdown right now with our price action kind of breaking below that 69,000 right now. We're kind of breaking that level that we were talking about earlier. Like I said, it'd be a hard take because we are so exhausted right now. It's going to be hard to see that continuation, and it'd be a hard trade because even if you did take this and say you took that short there, how do you know it's going to even go down to target 1 or not? Target 1 is going to be pretty wide because of how wide the bars are too. So you're looking at 67,800 level just for target 1, just based off the fib levels. If you use our actual levels, let's see. T1 67,100. So our actual levels would call something around right there. So I mean, just to go down to there, you're already asking a 6 to 1, pretty tight stop. You're asking for it to go down pretty decent amount too. So do you really think it could get down there? Definitely possible. But like we said, is it going to be able to get down there before we see that reversal? I don't know. That'd be a hard call. Definitely a hard call. Not something I'd be super interested in. It's just a little too far down there for how price action is kind of set up and where price action's at. With being over exhausted, you're asking it to do a pretty decent little move before you can kind of get out of the trade. And yeah, I mean, could you take it a little earlier? Maybe. There's just no like nice math, based off our system. There's not a lot of nice clean targets, nice like targets that you can actually kind of map out. So there's just not a lot of room there to kind of go on there. So you're better off just kind of hanging out, staying out of it for now, and kind of seeing what happens today. System is definitely saying that we are exhausted. And again, we could break down here. That's not out of the cards. It's just the likelihood of us breaking down is pretty low, just because of how exhausted we are. You're looking at the longer time frames for exhausted. The 15 minutes even starting getting exhausted. If you look at the Joule down here, which is an indicator for meta signals, you can see that we have we're actually in this lower zone, and it's actually all of the different EMAs and stuff like that are down in this lower zone, which means that we actually are in a pretty bearish scenario here, or pretty bullish, I guess, scenario here. We're in that oversold range, which is kind of where that purple is. So the indicator is calling a pretty oversold section here. Typically you'll see one of these green candles fire, which means we're in that oversold section. And then you'll see price action kind of drop a little lower, make a little bit of a lower low, and you'll see that that they actually call it well, we call it beast mode, but essentially you can see beast mode kind of firing here. And so we're looking for that price action flip to the upside. Is it at the complete bottom? I don't know yet, but it's definitely looking like we're going to reverse somewhere around here. That could be it right now. It could be we drop down pretty close to this target 1 and then reverse. Who knows? Could could even go past target 1 and then reverse. We'll see. But you know, the likelihood of reversing is a lot higher than the likelihood of continuing just down even below that. Yeah, not a bad place to buy some BTC. Yeah, I mean, it wouldn't be. It's not a bad thing. It's a good time. Today is when retailer traders try to catch the falling knife. Yep, that's what happens. I mean, today is. I mean, that's essentially what you're doing if you're taking a trade right now. That's it's sketchy. You're basically just, yeah, playing with the knife. Like, yes, it could go down, but even if it does go down, you're trying to jump out of that before you see that thing reverse, because when it does reverse, it could reverse hard. I don't know. We'll see. But like the system said, the only thing we'd really be interested in kind of taking today is if the system reverse comes up and takes out this green line here, and we see a nice 15-minute close above. We don't want to see a wick like this. We want to see a nice close above, solid close above, and then we can look at taking that to the upside. I think the targets were a little higher, so let's see, where were they? All right, here's the target at 73.015. So we're looking around this level here, right where this yellow kind of zone is, 73.15. I guess a little lower than that, somewhere around here. You know, so if we broke to the upside, that's what we'd be looking at. We'd taking at something like this. Stop wise, probably have to figure that out. Let's see, stop wise. I mean, technically stop wise, you should kind of be like, probably like that, I guess. So not too great. 1-to-1, I guess. You know, you're kind of asking to do quite a bit. You might be able to move your stop up, but you know, it's just sketchy. The more you move it up, there's not a lot of, you know, resistance and support zones through here. You could say, you know, once we break this level, then we're more than likely going to go up anyways. So, you know, you could run your stop a little closer. Kind of playing with fire at that point, because, you know, your only real the only thing that's really protecting you is just kind of the entry line anyways. So having your stop that close is a little sketchy. So closest place you can probably put your stop is out here at the breakdown line. That'd give you that 30-minute range kind of there to help kind of stop price action from hitting your stop. That'd probably be the more safe stop if you're looking at it that way. Still, either one, not super awesome. You know, you either have pretty low risk to reward, or you're really tight and you got a pretty good, you know, reward there, but the risk is too high almost for the reward that you're getting, because you're pretty likely to get that hit. Longer time frames telling us how to trade the 15-minute. Simple, no trade on low time frames. Yeah. Yep. We don't have any trades here because the longer time frames basically telling us that it's nothing setting up, nothing happening. So that's kind of the market read today. You'll have to let us know what y'all think of the new Kabroda Battle Box, what you guys think of the daily brief there. If you guys liked it, if you think it's something you'd like to see more often. We're thinking about offering it as a basically a paid service, so you get the full brief there. You would be able to sign up for, well, we're thinking about possibly doing a sign up for a newsletter, and you would basically get a portion of the daily brief, and then if you wanted to have the full thing, you'd have to of course, you know, pay for it. But just because it is pretty specialized knowledge, you know, pretty good, pretty nice thing to have in the morning when you're looking at trading something like that. Could trade the bounce back up to the breakout trigger, or at least back to the 50% line on the 2 triggers. Yeah, could be a possibility. The hardest thing I would say with that one is, would be kind of determining, when do you get in, when you get out. Definitely a possibility. I mean, you could trade maybe when you get the clear in, like when you clear back above the breakdown trigger, get a close above the breakout trigger on the 15-minute, then maybe you could take it up to that 50% line, or all the way up to the breakout trigger, like you were saying. So definitely a possibility. And then stop would, if I was going to throw a stop on that, it'd probably be, just kind of wherever price action goes. So like if it goes down to like there somewhere, then we'd have our stop kind of like below the last low of price action, because essentially with how it's setting up, that should be the bottom. So if you took a trade like that, that would be a pretty decent stop. You take it up to target 1. If price actually turned around right there where I threw my stuff, it would be around 3 to 1, so not too bad. And then if you took it to 0.5, about a 1.5. So yeah, I mean, pretty decent little trade there, if that's how the market kind of plays out. Like I said, we're just gonna have to watch and see how it plays, see what happens. But yeah, let us know what you think of the new stuff, and yeah, we're going to be looking to kind of push that out here pretty soon. Still working on some of the back end stuff, so we'll kind of keep you all updated as that kind of continues to grow, continues to happen. But yeah, for right now, that's really it for today. That's kind of the market. That's our little breakdown for today. That's what's happening. Nothing really to jump into, nothing really to trade today besides the possibility of maybe a long. Maybe this is a little bit more of an advanced strategy that Spearmaker was talking about there, but you could take something like that. Could also take something off of the top range. Definitely up for grabs there. But yeah, thanks for joining. Thanks for checking us out. And yeah, thanks for the people who came back, checked us out again. Thanks for coming back. Thanks for returning. Hopefully you all enjoyed that. Hopefully that was nice and informational. Don't forget to hit that thumbs up button before you all leave, and subscribe if you hadn't already. Thanks for joining. We'll catch y'all next time. Happy trading, y'all.